Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our guest on the show. Joining us today are Ritesh, Ashar of KIFS Trade Capital and Avinash Gorakshakar of Joindre Capital. Many thanks to both of my guests for joining me today. On the show today, we talk about GMR Infra. The stock has been on a tear since the Tata Group decided to make an investment in the company. We discuss whether this is worth a long-term bet on this company. Cement stocks have seen good traction in the last few days. We ask our analyst which is the best play among these cement companies. Motilal Oswal is up close to 50% in the last 3 months. We discuss what's causing the rally in the stock. And lastly, we ask our analyst about one stock that they are recommending for this new year. But let's start with the first stock, and that is GMR Infra. Still, it's in the F&O stock, but nevertheless, there is enough traction. Today, it's trading absolutely flat, but the counter of late has seen significant amount of rally. It's up almost 40% in the last 3 months itself. So, what's causing this rally? Avinash, what's your sense on GMR? What, according to you, is causing this rally? And if someone wants to make a long-term investment, would you recommend buying this share?
Darshan, I think clearly, the near-term trigger which is, driving the stock is basically the fact that Tatas are going to invest, and markets are closely awaiting how soon the airport business is going to be hived off. Our sense is that, as of now, if you look at the business, not much has changed. And in fact, the first half performance has been quite pathetic. In fact, the company has put up a loss of almost 800 crores plus. And I think what is disturbing is that, the overall leverage on the balance sheet has actually increased from March to September. It's gone up to almost 31,000 crores. So I think clearly markets have discounted this development of Tata's getting in, the airport business getting hived off. But to actually expect some sort of a better return on capital employed, a better, free cash flow from the business would take a long time. I would believe that, probably, after a more, almost a 50-60% upside on the stock, I would not be encouraged to buy this stock, considering the fact that there are many kind of, moving parts in the overall scheme of things, and wait for more clarity. So I would believe that, it's better to stay away for the time being. Let some more clarity come in. Maybe at a later stage, one could possibly buy in at some decline.
Okay, that's the view that's coming in. What's your sense on the counter? Is this something that you would recommend for the long term?
Definitely, I will agree with Avinash for the fundamental perspective. If you look at overall stock and the portfolio of the company, it is all about 69% invested into an aviation business, rather maintenance of the airports and the other activities for the infrastructures. Right now, the impulsive reaction in the stock is basically it is a news-based information where Tata is investing or other company is making a separate entity altogether for the airport business altogether. So overall I feel it is absolutely impulsive movement right now. If you look at overall balance sheet, the borrowing is too much. Against that, the capital deployment is required. So company is moving towards a strategic changes. Either they have to segregate this investment, doing a business of airport and the maintenance activity, which is almost consists of 69%, or they should have in long-term investors who are investing in the company to reduce the debt and make it a profitable business. So I personally feel, if you look at last year performance, it is quite range bound between 13.5 rupees to 18 rupees. It is a range bound momentum. Right now it is an impulsive growth what we can see. I think profit booking is quite advisable at this rate.
Okay, what if they, a lot of talks also indicating that they're looking to hive off the airport business. If that happens, would it be sensible for someone to just buy that airport vertical, or they should just not invest in this group at all?
No, definitely 69% of investment into the airport and the development, which is highly demand, and it is more focused from the government side as well. And they are pretty good. I could say they have a monopoly or expertise in that business vertical. So investors' point of view, it is really a good decision if they can only invest into such kind of vertical, which is consist around 70% of the overall portfolio of the company.
Okay, any view on that? In the airport division, if that probably gets demerged, does it make sense for someone to invest in that?
No, I think that would be a more kind of a scalable business, Darshan, because clearly, despite being the fact that it would be a capex heavy business, that is one business where, the company has been showing good amount of profits and where scalability is assured. They have, a very large presence in the airport business, and they know how to manage these airports very well. So I think markets are probably waiting for this event to happen. On a consolidated basis, I think it's very, uncertain, considering the kind of ROC, the company has generated, and, almost 73% of the promoter stock is pledged. So I would believe that it's better to be a little cautious here. The stock has run up quite fast, so we could see a little bit of correction and wait for this corporate action to happen. At that point, maybe one could look at investing.
Okay, that's the view that's coming in on GMR. Don't invest at this point of time. Only if there is some bit of corporate announcement that could come in, that is the time it deserves a relook. The second stock we want to talk about is basically the cement sector. A lot of cement stocks or cement companies across pan India have taken price hike, especially in the South India, in Gujarat, East India. So all of them have taken price hike, and most of the cement stocks have managed to rally significantly. We ask our guest whether they like this sector and which are the cement stocks that I believe are best suited, and they have invested. They have asked their clients to invest. What's your sense on the cement sector? Is this a sector that you like?
Definitely yes. It is one of the growing sector, I could say that. At the same time, we are amongst the top world's second largest producer of the cement in terms of overall production. And when the government itself is putting so much of efforts to revive our economy, the infra will play a major role. So when the infrastructure's development is coming in place, the cement is a raw material which is definitely has a part of the commodities, it is in requirement. When the company has increasing the price of the cement, and at the same time the raw material price has been decreased by almost 10 to 15%. So overall profitability is growing. That is the first point. Secondly, when the demand of the product is high, so the sales is also increasing. So my sales numbers is increasing year on year basis, and at the same time if I am getting a benefit of the profit margin, so definitely it is in the demand of the product, and at the same time it is helping to increase our economic growth. So because of focus of the government, I think it is going to be a continuous process.
Okay, which cement stocks do you like? Which is the best place, and which are the weaker ones?
See, if you look at overall, I think ACC is going to be my strong bet. If we'll consider a peer group performance, the P ratio of the ACC, it's quite low comparatively. If you look at EPS, it is given a good amount of return. So considering the peer group and the stock performance, it has given you the good amount of return going forward as well. And order book, if you look at, it is almost growing by 28% on quarter basis. So I could see this stock is quite range bound, consolidated and growing. So it is always be a safe bet to invest into the ACC.
Okay, ACC is the best pick. Any stocks that you would avoid in this sector as such?
Not really. Since it is a demand-able product in the industry, so I don't find any particular stock those who are into a debt or they are not performing well. But yes, definitely the brand is matters, and the consistent performance and the experience is also matters. So our recommendation is more into the ACC.
Okay, that's the view that's coming in. What's your sense, Avinash? Firstly, on the sector, what's your view on the sector?
No, I think definitely, I think if you leave alone the third quarter numbers, I think hopefully we would be having the budget, and I would not be surprised that infrastructure would be given a significant boost. So I think cement is a very vital element for the infrastructure pack, and I would not be surprised that volume growth as well as this kind of cement price increase would actually help cement companies in the coming 1 or 2 quarters in terms of profitability. And as Ritesh mentioned, the larger players who have geographical pan India coverage could definitely get a significant kind of leg up, considering the fact that cement is a localized commodity. A lot of cost goes into freight. So I would believe that the larger players would definitely take a larger share of the kind of market share gains, and I think here Ultratech and ACC definitely looked well poised.
Okay, Ultratech and ACC. What about the regional plays? So I believe you're going in for the pan India players. On the regional front, do you like any plays?
See, I think within South, we've been recommending Ramco Cement. Our sense is that Ramco has increased capacity of late, and I would not be surprised that here also the benefits of volume as well as pricing would kick in. And definitely, despite the fact that it's obviously leveraged a little for the new capacity, our sense is that till date, I mean, it has delivered. It's currently operating at around 80-85%, and I believe that coming year possibly the new capacity would obviously get into action, and one could see a decent amount of volume growth. But our sense is that ACC at these levels looks much better poised, considering the fact that this would be their fourth final quarter for their calendar year 2019. Definitely, from a leverage point of view, it's one of those companies which has got significantly less leverage on the balance sheet, and operating leverage obviously would kick in from coming year.
Okay, so that's the view that's coming in. Pan India players being preferred at this point of time. Just to add, most of the cement stocks have rallied. We've seen a 20 rupee uptick in price for 50 rupee kg bag, 50 kg bag. in the south. That's why counters like Ramco Cement and India Cements that have a significant presence there, they have managed to rally. On the east, there is Dalmia, which has rallied. Also, take a look at this small company called Kakatiya Cement, which has significant presence in Telangana and Andhra Pradesh, and that has been on a tear given the price move that you've seen in the last 3 months. It's up 73%, majority of the rally coming in the last 3 days itself. So there is traction that's happening on the cement place. The next stock we want to talk about is another stock which is trading at a fresh 52-week high, which is Motilal Oswal. Now they actually operate in quite a few verticals. Are most of the verticals growing for them? Are concerns on the housing finance business overdone? What's causing the rally is something that we want to understand. Motilal Oswal has been on a tear, at least in the last 3 months. It's up almost 50%. What, according to you, has gone right for Motilal Oswal?
No, I think Darshan, clearly most of the larger brokers, including Motilal Oswal, have done well, largely because there has been a large fear in the markets that the smaller brokers, which actually created a lot of hassle with retail investors, especially names like BMA, Carby. I think that has been the primary reason one has seen a marked shift in names like Motilal Oswal or even ICICI Securities. Our sense is that Motilal Oswal has a very diversified product mix. Apart from the broking business, it has a large wealth as well as a AMC business, and I think the AMC business has been built from scratch and has a very dominant kind of now face on the AMC side. So our sense is that the markets are definitely rewarding larger players, which could possibly take a downturn and a shock in one part of the segment. As far as the the housing finance business is concerned, there were some problems in the last 1 or 2 quarters. I think asset quality will be a little challenge here, but hopefully the mix is not very large. So I think it's going to be the institutional broking, the wealth and the AMC business which is going to be in fine fic, which is going to actually re-rate the stock going forward.
Okay, that's the view that's coming in on the counter. What's your sense on Motilal Oswal?
Definitely, if I look at overall portfolio of the Motilal Oswal, apart from the broking business, as Avinash rightly said, they are more focusing in terms of wealth management products and the fund management activities. When the broking forum have been shifted to wealth management product and AMC business, it is definitely giving them lot of trail income as well. If you look at overall client base, it is almost more than 12 lakhs plus customers, and right now in the last 1 quarter there are a lot of challenges from the SEBI side and the investors. Lot of issues are coming in, so people are moving towards branded companies and the larger player, and at the same time they are focusing towards the discount broking company as well. If you look at overall trend of Motilal Oswal, it is almost corrected by 40 to 50% from the 52-week high as well. But if you look at in terms of profitability, they are doing pretty well in terms of wealth products, wherein they are growing by almost 33% on year-on-year basis, and this wealth product is giving you the continuous trail income from next 5 to 10 years. So I personally feel financial sector Motilal Oswal is going to be a strong bet.
What about the other ones? A lot of companies, there's IIFL, there is Edelweiss. Do you like them also? You think that the traction that Motilal Oswal has will actually, trickle down to them also?
Not really. IIFL is also doing pretty well. If you look at overall stock performances last almost 1 year, it's almost given 20 to 30% return from the bottom. It was quite range between the almost 130 to 145, and it has moved to 158 in terms of IIFL Finance. And if you look at IIFL Securities also, it has bottomed out to 90 rupees, then it went to 40 rupees, average it out 40 rupees, and now it is running at around 54 rupees. So it is a diversified business in terms of IIFL Securities and IIFL wealth product. So if we'll look at it in terms of wealth and the client base of the organization, both are parallelly running good. When we'll compare with an Edelweiss, they are stuck up with a lot of NBFC's products and the structured products. So because of that reason, stock is not really doing well. But overall, the structure of Edelweiss is also pretty well. But due to financial crunches, they are not able to grow their other verticals as well.
Okay, and you have any view on the other NBFCs as such?
No, I think from a longer term perspective, Darshan, Edelweiss looks pretty attractive. In the ARC business is now going to get a significant benefit, considering the ISAR deal is now complete. So I would believe that from a longer term perspective, the management bandwidth and the risk mitigation which they have put, they are largely not dependent only on the broking vertical. They have the ARC, the AMC, the wealth, as well as a lot of debt structured products. So I would believe that somebody who wants to take a longer term call can also bet on Edelweiss, considering that most of the negatives now largely on the NBFC side has got factored into the price. So I think it's going to be a long term wait here, but definitely in terms of the growth, definitely Edelweiss also can deliver quite well.
Okay, and the last stock we want to talk about, it's 2020, and we ask our guest one stock that they have told their clients to buy for 2020. Which is that stock, Ritesh, that you told your clients, okay, you should buy the stock and hold it for 2020. Probably you'll get decent returns there.
Our bet will be more into the Jubilant Food.
Okay.
If you look at overall life trend and the structure, how it is, lifestyle of an population is increasing and the demand of pizza per se, they are having a fantastic monopoly of this product. In terms of cash in hand, in terms of cash reserves, it is quite good comparatively. If you look at overall market share, it is almost 69% in terms of pizza as a product. In terms of outlet, I think every year they are increasing outlet by almost 60 to 70 outlets across the India. And if you look at per outlet profitability, it comes to around 23 to 24% as in part of an OPM. And in terms of revenue versus OPEX, it hardly comes to around 13%. So if I look at overall cash reserve within company is pretty well, and in terms of products, it is quite demanding. So long-term perspective, the growth is going to be inconsistent. If you look at the graph of last 1 year, every quarter the company is delivered a good amount of result, and the trend is into the positive side. If you look at revenue growth also, it is almost increased by 19% quarter on quarter.
Okay, so that's on the financial side. What about risk in terms of competition that's coming in, online app aggregators? Do you think that probably will be a risk? And what about valuation? Is that not on the higher side?
See, if you look at risk in this particular segment, there is no risk because company is having enough surplus in hand. When the company is debt free or having enough surplus in hand, they can easily able to beat the competition. When it comes to online, compare with an online to offline, the delivery cost has been reduced drastically because it is all about the man management and other OPEX costs is involved. When it comes to the online model, price is almost decreased by 25 to 30% sometimes. But during this reduction of the price, it is nowhere impacting in terms of product price. The 30% of the reduction of the price, it is compensate again whatever my delivery cost. So I don't think so it is going to be a big challenge.
Okay, and what about valuations?
Valuation is pretty well, has surplus in hand, and the profitability is also consistent by 20-25% year-on-year basis, and the revenue growth is also growing. So I think valuation-wise, it is pretty well. I could not say that it is quite expensive at this point in time.
Okay, so Jubilant Foodworks is something that Ritesh likes. What about you, Avinash? Which is that stock that you told your clients?
No, in fact, Darshan, from the private banking space, we like ICICI Bank. Our sense is that this quarter could be a very bumper quarter for them, considering that the Essar Steel deal would get reflected in this quarter. And more importantly, both on the corporate as well as on the retail side, the loan book growth has been quite strong. Our sense is that we could see at least, a 100 to 150 basis point cut on the asset quality kind of side, at least in the next 1 or 2 quarters. And more importantly, other subsidiaries which the bank holds, especially on the insurance side, on the general insurance side, especially on the security business side, all are doing pretty well. So I would believe that, this is a stock which could possibly compound 15-20% annual growth for the next 2 years. And I think at these levels, the investor can easily expect a decent risk reward. I think considering that not many negative surprises on the asset quality side would now come in.
Okay, so that's the view that's coming in on ICICI Bank. The stock is trading at the day's high currently, so there is a lot of traction. But with that, it's a wrap on today's edition of Hot Money. Let me thank my guests Ritesh as well as Avinash who've come in today with their picks and stock discussion. Ask BQ comes up next. Stay tuned to Bloomberg.